Guys, you need to have a look. Last time Cardano made this signal, it went up 18,000%. And we're in the midst of making the same signal. What will happen now? Let's find out in this video. Hi guys, it's River here and welcome back to my channel. But as always, let's do a quick overview of the Elliott wave structure and how I count my waves before we start the main analysis. But feel free to skip this part if you want to. So, we know that in Elliott wave theory, there are 5 waves of motive wave, followed by 3 waves of corrective wave, and that these 5 waves of motive wave can become bigger wave 1, wave 3, and wave 5, while these 3 waves of corrective wave, A, B, C, can become bigger wave 2 and wave 4. But perhaps the most important thing most so-called Elliott wave analysts out there is not showing you is the standard in which they use to count their waves. But in my channel, because I want my viewers to fully understand my analysis, let me show you one of my standards for counting the waves. So, one of those standards is to use moving averages and their death cross and golden cross. For example, if I see a death cross like you see in this red circle over here and over here, this will tell me that a correction has already started and is in the process of making a corrective wave. But if I see a golden cross like you see this green circle over here and over here, this will tell me that a correction is finished and is in the process of making a new motive wave. Now, what this all means is that whenever I see a death cross followed by a golden cross like over here and over here, I would consider these as a signal that wave 2 or wave 4 has finished. So, now that's all explained. Let's get right into the main analysis. Alright, so we have over here the chart for Cardano, and first let's have a look at the higher term time frame. But before we have a look, let's erase all our drawings, get rid of all our indicators, change the chart from linear to log. And you might be wondering what the hell happened over here, because the price action started from here, but when the flu dump happened on March 2020, the price came down below the starting point. So that's not, well, valid as Elliott wave theory, right? But if you actually have a look at the trading view from the coin market cap, Cardano actually started in 2017 of October, and even after the flu dump, the price action of Cardano didn't drop below the starting point. So that we can say that this whole structure of Cardano, this whole price action, is actually valid as an Elliott wave theory. So let's go back to our main chart from trading view and let's apply the same price action. So something like this. Okay. Now that that's out of the way, let's start with the real analysis. Let's start counting the higher term time frame wave counts by spotting all the death and the golden cross between the higher value moving averages. So we can immediately see that there is a golden cross between yellow and red over here and a death cross between yellow and red over here. And like I said before, if I spot a golden cross between yellow and red like over here, I consider that as a signal that a new motive wave has already started. So that would mean that this price action over here, or price point, will be wave 2, making this wave 1, and then wave 3 over here. And then because there's a death cross between yellow and red, that would make this current process as either wave 4 or wave A of wave 4, like this. And I just want to have a closer look at wave 3 because it's going to give us the hint for the strategy for the upcoming move. So let's have a look at the death cross and the golden cross between pink and gray moving average, because there is no death cross and golden cross between gray and yellow. So we have death cross between pink and gray over here, golden cross, death cross, golden cross, and then up we go, and then death cross over here, and then a golden cross over here. So that would mean that this is wave 1. This whole structure over here would be a B, C, making it wave 2. And then up we go again into wave 3. And then a descending triangle formation of wave 4. And then wave 5. So wave 1, 2, 3, 4, and then 5 into red level wave 3. Alright, so now that's explained, let's have a closer look at the current formation over here by looking at the lower term time frame. So let's change our chart from daily time frame to 8-hour time frame and have a closer look at the current formation. And we can start by counting all the desk cross and the golden cross between various moving averages, and we have the desk cross between red and blue over here, so that would mean that this is red level wave 3, and we are in the process of making red level wave 4 or red level A of wave 4. And we can also see that there is a desk cross between yellow and gray over here, golden cross, and then desk cross over here. So we know that this is a 3-wave structure. So gray level wave A, wave B, and in the process of making wave C. And we can also count the desk cross and the golden cross of pink and gray moving average. But before we do that, I would like to just explain the structure over here. And if we have a closer look, we can see that there is a pink and gray golden cross over here, desk cross over here, golden cross over here, and desk cross over here. So this means that this one over here and this one over here has the same wave size or level. But because the price point of this one over here has exceeded the price point over here, this is to be considered as a corrective formation of A, B, and C, like this. A, B, and C. So when it is a corrective formation in regards to a bigger trend that is towards the downside, in this case, it can be a formation of wave B in a 3-wave structure. A, B, C, this structure right over here, or it can be either wave 2 or wave 4 of a 5-wave structure, like this. B, C, and A, B, C, like this. So now that's explained, let's count all the desk cross and the golden cross between pink and gray moving average. So we have desk cross over here, golden cross over here, that's between pink and gray, and then over here, golden here, that's here, and then golden here. So that would mean that this is wave 1, this is wave 2, wave 3, then A, B, C into wave 4, wave 5, wave 6, and wave 7. So if we have 7-wave structure, this means that there was a continuation of 3-wave structure of A, B, C. And if I draw the structure, it would look something like this. A, B, C1, C2, C3, C4, and C5. So A, B, C, but C will be C1, C2, C3, C4, and C5, making this a 7-wave structure. 3, 7, like this. But in comparison, if we have a 9-wave structure, this means that there was a continuation of 5-wave structure, and if I draw the structure, it will look something like this. 1, 2, 3, 4, 5, 1, 5, 2, 5, 3, 5, 4, and 5, 5. So 1, 2, 3, 4, 5, 1, 5, 2, 5, 3, 5 4, then 5 5, making this 5. So 1 2 3 4 5 6 7 8 and 9. So we can assume that if grade level wave A had total of 7 wave structure, it is likely that grade level wave C is likely to have a 3 wave structure of A, B, C of pink level like this, rather than a 5 wave structure. But again, because corrective wave counts are very hard to predict, unlike the motive wave counts, and I don't trust the lower term time frame wave counts as much as the higher term time frame wave counts, let's have a look at other indicators to get some more hints. So let's turn our drawings back on and change our time frame from 8-hour to 3-day chart, and let's have a look at the Bollinger Band. And if you have a look at the Bollinger Band, the only time the price action of Cardano broke below the band was at the flu dump, and that flu dump was red level wave 2. And strangely enough, the price action of Cardano broke below the band a few weeks ago, and we've considered this area red level wave 4. Not only the Bollinger Band, but if you have a RSI on the 3-day chart, when the RSI came below, to the oversold level on the 3-day chart, it was wave A of red level wave 2. And a few weeks ago, when it also broke or came down to the oversold area, we also consider that this area could be also a wave A of red level wave 4, right? Alright, so Bollinger Band and RSI is hinting that this is either red level wave 4 or A of red level wave 4. But if you also have a look at the Fibonacci retracement of red level wave 3, let's just turn off our log chart from now and then extend it all the way to the endpoint of red level wave 3. You can see that the price action of Cardano bounced off around the 0.886 level of Fibonacci retracement level, which again I think is the last line of defense. So this again says that around here is the perfect bouncing point for Cardano. And I consider all of my trend lines very important, because if I go to my daily chart, and maybe we can just turn off the Bollinger Band and Fibonacci retracement and all of our indicators and just focus on the trend line, you can see some of my trend line has made some good calls regarding support and resistance. For example, it made resistance over here, support here, resistance here, and resistance here, and support here. So I'm assuming that if the price of Cardano goes up from here and then go down, or go straight down from here, if it does fall below this trend line and come into this pouch again, I would consider that as a great opportunity to buy some more into Cardano. So considering all the wave counts and the indicators that we've discussed so far, let's come up with some scenarios and the strategies according to those scenarios. So the first scenario is that red level wave 4 is finished over here, and we have already started red level wave 4B or red level wave 5. So if I draw, red level wave 4 is finished over here, and we have already started on making red level wave 4B or red level wave 5. Alright, so our scenario 2 is that gray level wave C is still in progress, hence we are still in the process of making red level wave 4. So A, B, and then C like this, which means that we are still in process of red level wave 4 or 4A. All right, so what can be the strategy for these two scenarios? Well, for scenario 1, buy whenever the price falls below 1-day yellow moving average after a 12-hour candle closure above $1.20. So if a 12-hour candle closes above this roughly around $1.2, and the price falls below the yellow moving average in a daily chart, that is considered as a buying opportunity because the hint is in red level wave 3. So let's go to red level wave 3 and have a look. And if you have a look in the gray level of red level wave 3, wave 2 and wave 4, there was a good buying opportunity over here below the yellow moving average of a daily time frame. Over here, buy over here and buy over here. So it went up and then it went up again, right? So the same will apply over here when the price action of Cardano goes something like this, right? And the daily time frame yellow moving average does something like this, then this would be a buy opportunity, and this would be another buy opportunity. All right, so strategy for scenario 1 is discussed. Then what about scenario 2? Sell 3% at $0.65, 5% at $0.75, and another 5% at $0.78 to $0.85. Basically, selling as the price goes up all the way till 1-day yellow moving average. So the scenario 2 is considering that gray level wave C is still not finished, and there is a potential possibility for the price action to fall down again. So what we are going to do for that scenario is to basically sell here, here, and here as the price goes up and then down again, and then buy back when new low is made into the pink pouch, and regular bullish divergence is formed on 3-day and RSI stochastic momentum like this over here. So we would be looking at something like this. If the price action goes up again and then fall down, there would be a bullish divergence in RSI and stochastic momentum like this. Okay, so that's it for today. If you liked the video or got anything out of the content, please like the video and hit the subscribe button, and I'll see you in the next video.